This is very short answer type questions, question 1 to 22. The first question is, under which expense head is loss on issue of debentures shown? Give reasons. Answer 1. Loss on issue of debentures to be written off after 12 months from the date of a balance sheet or after the period of operating cycle, whichever is lesser is shown under the head non-current asset and subhead other current asset in the assets part of the balance sheet of the company. Loss on issue of debentures to be written off within 12 months from the date of a balance sheet or within the period of operating cycle is shown under the head current assets and subhead other current assets in the assets part of the balance sheet of the company. Second question, briefly explain the expense head depreciation and amortization expense. Depreciation, answer 2. Depreciation is an expense written off to profit and loss statement of a profit and loss. It being cost of a tangible fixed assets written off over their useful life. Depreciation is the fall in the value of a fixed assets due to its usage or efflux of time or obsolescence. And here another question is asked, that is amortization expenses. Amortization, like depreciation, is also an expense written off to statement of a profit and loss, it being cost of tangible fixed assets written off over their useful life. In the statement of profit and loss, total amount is shown under the head depreciation and amortization expenses, and the details are given in the notes to accounts on depreciation and amortization expenses. Then question 3. Name the major head under which the equity and liability part of the company's balance sheet is organized and presented. That is equity and liabilities part. Equity and liabilities part. This is answer 3. The name of major heads under which the equity and liabilities part of the company's balance sheet is organized and presented are: 1. Shareholders Funds. 2. Share Application Money Pending Allotment. 3. Non-current liabilities. 4. Current liabilities. Then fourth question is, what is a contingent liability? Where it is shown in the balance sheet, give an example of contingent liabilities. What is contingent liabilities? Where it is shown in the balance sheet, give an example of it. Answer 4. Contingent liabilities are those liabilities which may or may not arise because they are dependent on a happening in future. This is contingent liability. Where it is shown in the balance sheet. Contingent liability is not recorded in the books of account, but is disclosed in the notes to accounts for the information of the users. It is not shown in the balance sheet. Third part, give an example of this. If an income tax claim of 10,000 rupees is made against the company and the company filed a case for dismissal of the claim in the court, then contingent liability may arise. Whether the company has a liability or not is dependent on court order. Thus, it is contingent liability. Fifth one is, name the major heads which appear in the assets part of the balance sheet. Name the major heads which appear in the assets part of the balance sheet. The names of major heads which appear in the assets part of the balance sheet are: 1. There are 2 major heads. 1 is non-current asset, 2 current assets. Then 6th, name the major heads which appear In the equity and liabilities part of the balance sheet, equity and liabilities part of the balance sheet. Answer 6. The names of major heads which appear in the equity and liabilities part of the balance sheet are 1. Shareholders Funds, 2. Share Application Money Pending Allotment, 3. Non-current liabilities, 4. Current liabilities. Then question 7. Name the head under which long-term investment appear in the balance sheet. Under which head long-term investment appear in the balance sheet? Non-current asset is the head under which long-term investments appear in the balance sheet. 8th question is, name the head under which goodwill appear in the balance sheet of the company. Answer 8. Goodwill appears in the head non-current assets in the balance sheet of the company. Question 9. Name the head under which debentures appear in the balance sheet of the company. Debentures appear under the head non-current liabilities in the balance sheet of the company. Question 10. Name the head under which unclaimed dividend appears in the balance sheet of the company. Answer 10. Unclaimed dividend appears under the head current liabilities and subhead other current liabilities in the balance sheet of the company. Question 11. Name the head under which proposed dividend appears in the balance sheet of a company. Answer 11. Proposed dividend appears under the head current liabilities and subhead short-term provisions in the balance sheet of the company. Question 12. Give 4 examples of tangible fixed assets as per Schedule 3 Part 1 of the Companies Act 2013. Answer 12. Tangible fixed assets are assets which can be physically seen and touched. The examples are land, building, plant, equipment and furniture and fixtures as per Schedule 3 Part 1 of the Companies Act 2013, that is tangible fixed assets. Then 13th question. Name the major heads of revenue in the statement of profit and loss. Name the major heads of revenue. The major heads of revenue, answer 13. The major heads of revenue is in the statement of a profit and loss are revenue from operations 1, 2 other income, 3 expenses, 3 has A, B, C, D, E, F, G part. That is expense. The major heads of expense are cost of material consumed, B, purchase of stock in trade, C, changes in inventories of finished goods, work in progress and stock in trade, D, employees benefit expenses, E, finance costs, F, depreciation and amortization expenses, G, other expenses. And 14th question. Name the major heads of expenses in the statement of a profit and loss. The major heads of expense. Answer 14. The following are the major heads of expenses in the statement of profit and loss. A, cost of materials consumed, B, purchase of stock in trade, C, changes in inventories of finished goods, work in progress and stock in trade, D, employees benefit expenses, E, finance costs, F, depreciation and amortization expenses, G, other expenses. And 15th, name the items that are considered to compute cost of materials consumed. The items which are considered for calculation of material consumed. Answer 15. The items that are considered to compute materials consumed are opening stock of raw materials, B, closing stock of raw materials, C, opening stock of work in progress, D part, closing stock of work in progress, E part, opening stock of finished goods, A part, closing stock of finished goods, G part, purchase of raw materials. Then 16th. Answer 16th. This is which purchases are shown under purchase of stock in trade. Which purchases are shown under purchase of stock in trade. Goods purchased for reselling are shown under purchases of stock in trade. 17. What are the items that are considered to compute change in inventories? The items considered to compute change in inventories are A. Opening stock of raw materials, B. Closing stock of raw materials, C. Opening stock of work in progress, D. Closing stock of work in progress, E. Opening stock of finished goods, F. Closing stock of finished goods. 18. How is the change in inventories calculated and shown in the statement of a profit and loss? How is the change in inventory? That is 18th one. Change in inventories and calculated and shown in the statement of profit and loss in the following manner. It is done in notes to accounts with the particulars, rupee symbol and the date. First of all, change in inventories of stock, finished goods, work in progress and stock in trade. A part, finished goods, opening inventory less closing inventory. Out of opening inventory, we deduct closing inventory and show it in the final count. That is, the answer is either increase or decrease in inventory of finished goods. B, in the B part, work in progress, opening work in progress less closing work in progress. In the details column, we deduct closing work in progress from opening work in progress and show it in the final column. That is either increase or decrease in inventory of work in progress. Then C part, stock in trade, opening stock in trade will be shown in the details column, less closing stock in trade in the details column. Out of the opening stock in trade, we have to deduct closing stock in trade. We will be finding increase or decrease in inventory of a stock in trade. Now these three has to be added and shown as net change is equal to A plus B plus C. And in this way, we show changes in inventories and calculate and show. Name 19th question. Name the type of expense that are shown under employee benefit expenses. That means wages. Under answer 19, the types of expenses shown under employees benefit expenses are A. wages, B. salaries, C. bonus, D. leave encashment, E. staff welfare expenses, and F. employee compensation expenses. 20th question. Briefly explain the nature of expense that are shown under finance cost. Answer 20. Finance costs mean costs incurred by the company on the borrowings or loans and public deposits. Finance costs include expenses incurred for the borrowings such as a loan processing fee, discount on issue of debentures, premium payable on redemption of debentures, etc. Then answer 21. Give the meaning of long-term provision. What is long-term? What is the meaning of long-term provision? Answer 21. Long-term provisions are the provisions against which liability will arise after 12 months of the date of balance sheet or after the period of operating cycle. Each item of a long-term provision is disclosed separately in the notes to accounts on long-term provisions, which are total, and a single amount is shown against long-term provisions on the face of the balance sheet. Then question 22. Are bank charges shown in the finance costs? Give reasons in brief. Are bank charges finance cost? No. Bank charges are not shown as finance costs but shown under the head other expenses. Bank charges being an expense for services availed from bank is not a finance cost.